Hi guys, good afternoon. Okay, this is Sonic here. All right, we are on week number 32. Let's talk about what we have for this week. Okay, as you can see from the screen, we have quite a lot of item coming up for this week, especially actually from Monday already onward. We have all the way, we have all the news all the way until on Friday, right? So this is gonna be a quite a important week in my opinion. All right, as you can see from the screen. Okay, today we had the Aussie rate statements, and it is as kind of like expected, right? It's stay holding the rate as per 0.25. Okay, moving forward, right? We have today we don't have much of the high impact news anymore, and from tomorrow onward, we have all the US dollars item will be coming up. So please, I'm expecting, please watch out on the US dollar related currency because for today and tomorrow, maybe in the morning, I don't think we will be having so much of the big movement, except on stock market for sure. Because this week we still have quite a bit of that those are earning to be out, if I'm not wrong. Okay, and most importantly, of course, the most important one for this week will be FOMC. Okay, I will talk a little bit about in a while. Okay, to move forward first, okay, we have a British pound item will be coming up, right? As you can see from here, we have a policy statement. So basically, this week we have a Aussie and British pound at the same time, or on Friday we have an FOMC, which is a non-farm payroll plus an unemployment rate. Okay, it's gonna show the the health of the US economy. Okay, so we just dive a little bit deeper into the US economy at the moment, right? As you can see, even though previously, the NFP is like the most important data for a forex trader. Of course, it still is, but we are also nowadays, okay, a lot of forex trader they are also using weekly unemployment claim as a barometers to gauge the health of the economies, right? Health of the US economy rather, right? So it is good that we pay attention to it as well. Okay, so let's talk about what we will be having on this Thursday. All right. Okay. So okay, we have a very big shock in the earlier part of 2020. It is around in March, right? It shoot up all the way up. Then eventually it came back down. It's part of the reason is that because during those shoot up period, U.S. economy is pretty much on the largely on the shutdown, right? So a lot of part-time jobs are lost. A lot of like temp job, waitresses, waitering, service industry jobs are lost. So that's why we have a very big shoot up in the earlier part of the year, right? Um, of course, the market did dive according to it as well, but eventually it came back up. It sort of like it pulled back down. One of the reasons is that because they did the opening back up of the economy, right? So they opened back up again. Okay, but the thing here is that anyway, these are all the already priced in per se already. So what is happening right now is that you can see from here that the data are kind of like no longer they're going down anymore. That means the employment and employment issues stay persist, right? Even though they are not as big as they used to be in employment, but they are stay quite, they are stay way higher than what we normally have during like 2019 and stuff like that, right? So as you can see, we still have like a 14 million, 14 million people, right, claim for unemployment benefit every week. So it's still quite a huge number. And now the worrying trend is that they are not really going down. All right. So this is sort of like to tell that, the number kind of like holding there. All right. So it is, I kind of expect that it can be a worrying trend in my opinion. Let's say there's a big spike up coming up. All right. There's a spike up coming. It can have a very negative impact on the US stock market, in my opinion, because US stock market in such a way they have one up in such a way that like it's as almost as if back to the recover, almost as if back to the 2000 early 2020 level already. Especially if you look at S&P or Nasdaq, right? Especially Nasdaq, you can look at it. They even went all-time high, right? So a little bit worrying trend that you need to take note of. Okay, so please watch out on this data that coming out on Thursday. All right, and of course we have the big gun here. All right, of course on the employment rate on Friday, and of course non-farm payroll. All right, so it's also quite similar pattern, right? It's have a very big spike up, then they are now pulling right back up. So let's say they have a big tick up again, I think it will, and we might have some issue in the stock market. So I think Friday going to be a very important data or important information that you need to watch out for. Okay, please don't carry away. Whatever happened on the Monday, the market move in your favor or market move against you. Please don't take it so seriously, because the real data should come in only on Thursday and Friday. Okay, so let's talk about a little bit on the another data that I used to monitor weekly. All right, it's the Fed fund rate. The Federal Reserve Federal Reserve assess holding. All right, you can see it normally come out on every Thursday. All right, it comes out on every Thursday. So just watch out, look out for it every week. Okay, so as you can see, the data have been sort of like the holding having dropping. All right, holding having dropping almost for the past 2 months. Right, is in July 8th, it was the lowest in this past 3 months. Right, so currently we are not as low as on July 8th, but it is staying nowhere on the high side. So this is something that we need to watch out on as well. If let's say the number or the holding keep on dropping, or if it is keep on dropping, it is not a good news for stock market as well, because you can loosely translate that the higher the higher it is, of course, the better for the stock market, because we can see that the Fed will end up buying all the products that they are supposed to be buying, like treasury, or they're even buying some corporate bond on state, right? So if they are not buying, that's mean not a good sign. All right, so now let's focus on the chart right now. I will go through the major pairs. All right, so okay, currently is euro. Euro have been on the very, they're been in a very bullish trend for a recent 2 weeks or either 3 weeks, right? So currently they have met some strong resistance on the last Friday. So I'm expecting like 1910, 1.190, 1.190 level will be quite a big resistance in my opinion. Of course, currently they are sort of like making a run back, but I mean, I think they are all in line, or they are in the process of making a big bang on the coming Friday. So I'm expecting the market, for a time being, market can easily swing back up to 1.184, all right, or maximum 1.19. But this is where the resistance shall come in. So if you are looking for a short, all right, if you're looking for a short, maybe it's not the right time to go in right now. Okay, maybe you can wait a little bit longer at the higher level, and give you a better odds of winning. So I'm expecting this level again, 1.185 to 1.19 level will be a good resistance. All right. So let's go to British pound. British pound should be quite similar. All right. Okay, yesterday I was expecting the price will go to here, and it did go to here, and it's already make a very quick run, and it already make a comeback up already. Also quite similar, right? You can see the 1.301, 309, or even 1.315. I think this region will be a resistant region. So I expect market will either sideways, or they will go up a little bit higher before they meet any resistance as well. Okay, so if you are looking for a short, again, don't be rushed to short it down, because it's the trend is stay pretty much on the bullish trend, right? Okay, another one, and the important one is gold. All right, okay, gold, as you know, we are on the very big rise for the past 2 weeks, right? You can see that they rose like it's like almost $100 for within a span of the week. It is pretty, I would say, pretty unusual in my opinion. All right, and you can see that most of the time the market move in like 45-degree trend. 45-degree trend in such a way. Let me draw it out for you. Let me see. 45-degree trend, like, it's considered a normal and a healthy trend already, right? You see this kind of like anything quite close to like 90-degree, this kind of trend, yeah. I would rather say it's kind of like sometimes can be unsustainable in my opinion. All right, because of this have become a one-way street. Of course, it will be pretty fast and furious as well, but somehow or rather, sooner or later rather, right, the market will start to see the opposite, because everybody on the same side, right? So if there's is there any sort of like a sizable bearish trend coming in, or sizable resisting factor coming in, I think the market can pull back down, or market can go to sideways. This is exactly what is happening right now. All right, this is exactly what is happening right now, and you can see that the market have made some sort of resisting factor at the moment. So I think it is quite normal. I think it's quite normal for it to pull back down a little bit. Okay, I expect, okay, it's nothing to do with like breaking an uptrend. It's still on the uptrend. Okay, it's still on the uptrend. It's just that when they rise too fast, too furious, right? It is normal to make a like a logical pullback. Okay, so this is what I want to advise you or suggest you rather to so that you can be prepared, right? So I'm expecting it can easily, all right, it can easily pull back to 1937 or 1935 region, before they may even come back, go back up higher again. So when you're buying in, please make sure don't buy in so big until, like a $5, $10 move can have a very big dent on your on your on your portfolio, because this is not the proper risk management already. Okay, so like I said, we are still in the uptrend. To summarize, we are still in the uptrend. It's just that it also can go back down to 1935 logically before they climb, before they resume their bullish trend. So careful on the potential swing back here. All right, so this is on gold. And last but not least, oh, I still got two more to go. Second last one is oil price. Okay, oil price is, I was expecting like it will either goes like go back down or stuff like that, but currently it's pretty much on the sideways mode. I'm expecting we might go in that sort of like that fashion for a while. So I'm pretty neutral on the oil price at the moment. All right, so 37 point. For my CFD price is around $40 at the moment. I'm expecting 37.5 will be the support. At the same time, 41, 450, $42 will be the resistance for now. So I'm pretty much sideways for the time being. Okay, maybe a little bit bearish because of the maybe minor pullback, but it is the uptrend stay intact. Okay, so if you want to buy in, why don't you wait at those support level so that you can buy in at the low risk entry, or with a tighter stop loss. So no point chasing at the moment. All right, and last but not least, all right, US stock market, right? So US stock market, I have mentioned that we have important data to be out for this Thursday and Friday, right? So please watch out for that. So anything that happened in between right now, so because today is Tuesday, so Tuesday night, I mean for Asian it's Tuesday night, right? For Tuesday, Wednesday, or even in the early part of the Thursday, right? So please be careful, because market can really go up higher and stuff like that, may entice you to go in and buy in, and just to if you didn't realize that there's a news coming out, let's say Thursday and Friday, the data are pretty bad, the market really make a swing back down. I don't want you to get trapped in the movement, right? So please be careful. So we are yesterday we have a pretty decently bullish candle, all right? So I think maybe this is part of the plan that the smart money may want to use the news on Thursday and Friday to swing back down. So please please make sure you are putting your proper risk management before you enter, right? So what I was expecting it will go to 26,000 level. So it already went down already. It was a quick one, and I'm expecting they may, if they swing back, right? I think they can swing back to this swing level, which is here, right? This swing level, which is around 27K level, before they met with some strong resistance here. So same thing. I'm expecting this Thursday and Friday gonna be a important data, and they're gonna be the main driver of this week. So meanwhile, if you are trading or if you're taking any position, please be very, very careful. All right. So I will see you guys next week again. I will try my best to post the weekly video regularly. Please like and subscribe my channel. At the same time, if you think that my videos are informative, please do share as well. Thank you very much, guys.